Good morning, ladies and gentlemen. Thank you very much indeed for joining us, and welcome to this Policy Exchange meeting. My name, for those of you who don't know me, is Ian King. I'm the business presenter on Sky News, and this is the second such meeting that we've hosted. We were up at the Labour conference last week, and when I was a younger man, as a student, I worked at a theatre one time in a holiday job, stewarding for the local pantomime, and Buttons in Cinderella would always come up every night without fail and just say, "Oh, what a wonderful audience you look so much better than last night's," even if it was just two men and a dog. But I think I can genuinely say, looking at this compared with last week's audience, you do look much better. So thank you for that. We are here to discuss prospects for SMEs. SMEs, of course, employ getting on for 60% of the UK's population. They are the generators of growth. They are the people that create wealth in this country. And obviously creating an environment that fosters healthy SMEs is what we are all about. So without further ado, by the way, I just ask you, if you've got mobile phones on, please do switch them to silent. It just helps everyone. There'll be an opportunity later on to put questions to our distinguished panel. If you would be so kind as to say who you are and where you've come from, that would help us and the panellists enormously. So without further ado, our guests, our panellists. To my left here, Matt Hancock. I'm sure you all know. You know, people used to say that James Brown was the hardest working man in showbiz. Matt's job title denotes him as the hardest working man in politics. So he is. I actually have to check my notes. He's Minister of State for Business and Enterprise, Minister of State for Energy, and Minister of State for Portsmouth. So good guessing game, that one. If you name all of Matt Hancock's job titles. On my right is my Sky colleague Ed Conway. Ed is our economics editor. Alongside him is Steve Hughes. Steve is head of economic and social policy at Policy Exchange. On my left is Fiona Laffan. Fiona is very kindly, not as billed, but Fiona is from Goldman Sachs. Now Goldman, you'll be hearing a bit more about what their interest in the world of SMEs is a bit later on. Fiona is head of corporate comms for Europe, Middle East and Africa. And on my far left is Adam Whitehouse, and Adam is chairman, founder of a company called TMT First. I won't begin to tell you what it does because he can do that far more eloquently than I can. But his is an inspiring story, and I hope you'll agree, just a sort of story that we need to be hearing more about in the UK economy. So without further ado, what's going to happen, we're going to hear from each of our panellists. We'll then have a short discussion amongst ourselves and then throw it open to you for questions. So Matt, if I can hand over to you, please.
Well, thanks very much. I thought you were going to say that the panellists were more attractive than last week, but
well, that goes without saying.
I live in hope. It's a great pleasure to be here. This is for me as the Minister for Business and Energy. That's kind of my shorthand title, if that's okay. But it is absolutely vital to be listening to you and to small businesses to see what more we can do to make your lives easier. That is, in essence, my job title, my job description. I come from a small business background, so I know what it feels like. And I was talking yesterday on the stage about my family business and how that is, that's the first thing I really learnt about, and it's the values from that and from watching my parents build this business and then working in it, that I now try to apply to this job. And one of the things I've learned is that the civil service, brilliant machine as it is very good at introducing new regulations. It's quite good at removing old regulations. But what it isn't very good at is knowing what it is that is stopping small businesses from growing and expanding. And we can only do that through listening to you. When we came to office, what was astonishing was there wasn't even an audit of all of the different, the body of rules and regulations that had to be complied with. There was a sort of fire and forget attitude, at least not in the MOD, in the business department. They'd bring in a new bill with a whole load of new regulatory structure, and then they'd think about what they wanted to do next. And we, of course, wanted to try to make some things easier, so we set about scrapping some big regulatory pieces like the ID cards and the home information packs, two that spring to mind. But actually what we had to do was find out what is the stock of regulations that everybody has to comply with, and then go through them and whittle them down and down and down. One of the hardest things to do is measure the amount of impact of a regulation, because you can't just have, you can't just talk about one regulation. It depends what the impact of that is. And they had this extraordinary system where the measure was the impact on business. But that meant that if you were in business to help people get through certain regulations, and we removed those regulations, that was counted as a cost on business. So when we got rid of home information packs, which I mentioned right at the start, this is 4 years ago, that was initially counted as a hit on business, because the home information pack industry were really unhappy with us. So we had to change a whole culture, and as well as the individual rules. And we are now 4.5 years into that process, and there's undoubtedly a whole way to go. But I think that we are now really starting to shift the attitude. And because of our rule on 1 in, 2 out, every department and every official at junior levels in departments are now looking for outs, for things that they can do to make the life of business easier. Because they know that sure as hell they're going to want to bring something in at some point in the future, and if they want to, they've got to find 2 outs in order to offset them. So we now get proposals coming up through the machine for how to make the lives of business easier. This is a really big cultural change. I can feel it inside the departments, and over time I hope that it's felt in the real world as well. So that's just in one area that I've tried to describe the sort of culture change and the journey we've been trying to go on. There's a whole, obviously, making life easier for businesses includes a whole plethora of other things. The tax regime, which has become more competitive, but no doubt there's still more to do. The skills agenda, which I'm sure we'll touch on, where that is a long-term change that's needed to raise standards and expectations, but also make sure that what is being taught is what business needs. And then issues around making sure we get the right sort of infrastructure. But I am all ears. I'm constantly on the lookout for changes that we need to make it easier to grow and expand our business. And I'll finish by saying this. I now think it is within our sights as a country to be the best place in the world to start and grow a business. And that would be no mean feat. But we are not there yet. But I can't do it on my own. And of course, we need to get elected as a majority Conservative government next year in order to deliver on that. But we also need your help, and we need to engage with you to make sure that we put in place the measures that are necessary to get there. And I'm absolutely determined that we can and that we will.
Thanks, Matt. Ed.
Thank you. Well, I'm very happy to be here. I was slightly perplexed, to be honest, in the first place, because as a journalist, I'm literally the furthest thing you can get from entrepreneurship, apart perhaps from MPs, although present company excluded. They are rather on a different side of the spectrum. Although I did have some experience of entrepreneurship. I went to MIT a few years ago, and I kind of studied it, and then made my own pitch for a business that I thought had a really good chance of succeeding, a media business. And the professor took me aside and said, "Just stop trying to save journalism. It's finished." So I tried, but failed. But I presume that one of the reasons I'm here on the panel is to play devil's advocate to an extent, because the easiest thing in the world is to say we need to do more to help small businesses. It's the one thing that all of the speeches I've heard at all of the conferences tend to have in common. We need to do more. And the problem is that this is obviously a far more complex issue than many people conceive of. I'll just take you through a few kind of statistical misconceptions that are, a lot of statistics are kind of blurted out, which are intended to frame this argument, but some of them aren't quite right. And I'm going to start, to be slightly impolite, with the title of this session, 5 million points of light. Well, that derives from the notion that there are 4.9 million private businesses in the UK. 99.9% of them are small businesses or SMEs. But actually, when you dig into those numbers, 3.7 million of them are businesses with no employees whatsoever. They're sole businesses. Now, that of course, many of them are profitable enterprises, but they are very different from the kind of SMEs that a lot of people conceive of. So there are some misconceptions in terms of scale. Another stat that's often bandied around, 250,000 private sector firms are born in the UK every year. Now that's true, but then a decade later, 70 to 80% of them no longer exist. Another one, only 1% of new companies have sales of more than 1 million 6 years later. For every 10 jobs created by small firms, by new small firms, only 5 will exist a decade later. In other words, I mean, all of this, I'm not saying this to kind of denigrate the quality of statistics that we have here, but it's purely to make the point that it is a risky business. I mean, small businesses exist at the kind of sharp leading edge of capitalism. This is creative destruction that we're seeing here. And so what's fascinating looking at our attitude towards small businesses and policy towards small businesses is that tells us something about our attitude towards capitalism. You know, how comfortable are we with laissez-faire capitalism? How comfortable are we with creative destruction? And if you look at the kind of policies that we've seen from this government since January 2011, we've had 3 separate government plans devoted specifically to increasing the amount being lent to small businesses. We had Project Merlin, we had credit easing, and now we have funding for lending. And funding for lending has been adapted a few times to try and make it more successful in terms of channeling cash to businesses. You've got the Seed Enterprise Investment Scheme, an extremely popular scheme, which is essentially a kind of tax break for investors. But the net result of all of this is that since, and the numbers were just out yesterday, since 2011, there's been a cumulative £20.2 billion fall in lending to small businesses. The total amounts outstanding lent to small businesses is down by 14% since that period. And so, taking all of that together, it's difficult to think of many other policy areas where so much has been thrown at the problem to so little end. And that really is the concern, I think, that a lot of people might have. Number one, we clearly are not that comfortable with failure here. Number two, clearly there are problems in terms of the transmission mechanism that we need to deal with, but we have thrown a hell of a lot at the problem without necessarily seeing much statistical backup for it. And still there is a big funding gap, according to the Breeden report a couple of years ago, of 40 to 60 billion pounds over the course of 4 years. Now, my point kind of is just a broader one to end on, which is that when I was in the States, one of the things that struck me when I was there at MIT being told I was a disaster was it's not just about financing. Now, part of the reason that so many of the businesses there, that some of which I came across at early stages at MIT, had succeeded or were going to succeed is because they had a lot of support from things like DARPA, government, essentially, the military investment from the US government. Another reason is that there is a kind of a cultural difference which is difficult to get your head around, but does exist, which is that American investors and entrepreneurs are far more comfortable with failure, far more comfortable with having a business that goes bust and then trying again. I don't think we're quite there yet on that front of things. But nonetheless, I mean, I'll end with I spent a while doing kind of a historical book. I wrote a book earlier this year. It's available in all good bookstores. It's called The Summit. That's the plug over. But looking at that, actually,
you are a capitalist.
It's striking
you
how many.
You can find some copies that are unsigned. Actually, they're worth more than the ones you signed.
That's a very upsetting thing to say, and I make no comments as to its veracity or otherwise. But they are available, and I'll sign whatever you bring in front of me. The point is that a lot of these attitudes they haven't really changed all that much. Back in the 1940s, that was kind of, in a sense, the moment when the welfare state was being created, the governor of the Bank of England, Cato, he was called, Lord Cato, told the city, he wrote to the bankers, and he said, you bankers, you must show the public that, and this is the quote, the banking entity are anxious to play their part in the finance of small businesses. Now, that was the 1940s. You could take those words and put them into, I don't know, Vince Cable's mouth, maybe. Today, we still have the same kind of mindset. We still haven't solved it. To my mind, that's just because this is fundamentally about our relation, our policy relation with capitalism.
Thanks, Ed. Steve.
Good morning, everybody. I'm glad Ed talked about misconceptions, because I'm going to talk about those as well. Between 2008 and 2012, I worked for a business lobby group, and I got to see firsthand the effects of the banking crisis on SMEs and the real economy. And I think that there are a lot of things that are still misconceived about what happened during that time that are relevant to this discussion. At the height of the financial crisis, there's undoubtedly some pretty appalling behaviour from banks. So we're talking about the end of 2008 and the start of 2009, when credit facilities were withdrawn almost overnight, so overdrafts went, facilities were rearranged, there was higher arrangement fees and everything associated with that. And that caused an enormous problem up and down supply chains. There was a huge cash flow issue, there was payment terms being extended, and that caused stress in the real economy. After that, something changed. And after that period, there was still a narrative in the media about banks not lending to viable businesses, but it wasn't as black and white as that. There's a lot of shades of grey. On the supply side, there was obviously an issue. We've just gone through a credit fuel boom and turned into bust, so it's obviously more difficult to get finance. But there was obviously a demand issue as well. Businesses were paring back their investment. They didn't want to invest because they're picking up the newspapers every day and reading about the Eurozone crisis or the crisis in the UK, and the confidence wasn't there to invest. But also there was a phenomenon that we discovered called discouraged demand. And that was businesses wanting to get finance, or potentially thinking they should get finance, but not going to their banks to try and seek it. And the reason they weren't going to the banks to seek this finance was because within their networks of businesses they were hearing that banks weren't lending, or they were picking up the newspapers again and seeing that banks were lending as well. At the time, the banks, to give them credit, did an enormous amount to engage with business groups. And they came to us and they said, look, if you've got a business that's got a problem with our institution, come to us and tell us, and we'll sort it out, and we'll sort it out quickly. And these were very senior people within these institutions. And what we did was we contacted our members at the time and said, if you've got a problem with finance, this is what's going to be done. Come and speak to us about it. So a lot of businesses came to me and they said, this is our problem, this bank won't give you finance, and we passed them on to the senior people within the banks. Now, the problem was that it almost got a little bit embarrassing, because the businesses that were seeking finances, I wouldn't have lent them my own money. They were essentially in a position where they didn't have a cash flow forecast, they didn't have necessarily a plan for what they wanted to do with the finance or the type of finance that they needed. And that's what we're talking about when we say getting businesses finance ready. Before 2007, businesses might have been able to get finance from banks with that approach or with that method, but after 2008, 2009, they couldn't do. And I would argue that some businesses, or a large proportion of businesses, didn't necessarily adapt to a post-crisis world as well as some banks did. Now, this all brought up a whole range of competition issues and chat about competition policy in the public policy debate. And again, we're talking about a situation where I was asking businesses, well, if you're unsatisfied with what you're getting from your bank, why do you go down the road? And the response that I got was, well, banks are all the same, they only do the same thing, and the answer is going to be the same. So there's a real perception issue there from the business community that the banks were providing what they needed or what they were going to need. But I'd probably argue as well that the market did respond. You saw challenger banks coming along, Aldermore, Handelsbanken, which did exist before, but ultimately offered a different product and facilities for small businesses. And then we get to the alternative finance providers, which again are very small in terms of overall market share, but they are very important in offering an alternative to what we call traditional bank finance as well. And that's the market responding. But there is a role for the state, and I agree with Ed. We've been talking about this kind of problem for decades, but that's not to say there are interventions that the state can carry out which will help lending to small businesses. One product's called the Enterprise Finance Guarantee, essentially offered a government guarantee to support lending where it otherwise wouldn't have occurred, where there was no cash flow record, or where there was no security on behalf of the business to put up. That supported lending. It was still a commercial decision. It wasn't the state just lending to small businesses. It was still the bank making the decision, but with a different tool to help them to do it. And then, of course, we had the advent of the British Business Bank as well. Now the problem with the British Business Bank is, judging by history again, we have all these models around the world where we have other state institutions more integrated within the funding landscape of where they operate. So you look at the Small Business Administration in the US, KfW in Germany. These all do things which help support finance to small businesses, small, medium-sized businesses. But the problem is that they've existed for decades and have had the chance to grow and become part of that landscape. If we don't do the same and have a long-term plan for our business bank, then it won't be any good. And the final thing I'd probably say is that I've just talked about the relationship between banks and businesses, but there are all different manner of finance products out there for businesses which apply to different stages of their life cycle. And it's only through understanding the individual needs of businesses that you'll understand what the right type of finance for that particular stage of growth or that particular business is. And one of the problems is getting the communication of these products to businesses. How do we get the message to them that these things exist and get them to understand what they actually do and how they can utilise it?
Thanks, Steve. Fiona.
Thank you, Ian. Let me add my welcome and say we're delighted to be here sponsoring this event today in Birmingham. You might be surprised to have seen that Goldman Sachs is sponsoring an event on small business and wondered why, given we're not a retail bank, we don't lend to small businesses. But we do recognise the vital role that small businesses play in a growing economy and in job creation. And we're also a significant employer in this country, and so we have a very strong interest in having a healthy and vibrant economy in this country. Now, we're going to offer our perspective based on a programme we run here called 10,000 Small Businesses. Adam, who you'll hear from next, has been through our programme, so can offer some personal insights on that. But I'll give you some overview points. So what is our programme? It's called 10,000 Small Businesses, as I said. We launched it in 2010 in Yorkshire. It's designed to help ambitious small businesses grow. We see it as one of a number of interventions which are designed to support small businesses, and that it's quite a complex landscape. We don't think our programme is going to solve all the issues that are out there, but it's one piece of a jigsaw of support. We partner with 5 universities across the country. We came to the Midlands in 2011, and we work here with Aston University. It's been described by some people as a mini MBA, so that's partly true, but it's also much more practically focused. So it has academic components to it, but the businesses get the chance to work on their businesses and learn from each other. So we think some of those elements are quite unique. And a few facts and figures on the programme. Over 800 small businesses have been through it so far. 80% of our alumni are creating jobs. And of the earliest participants from the first cohort, they've on average almost doubled in size in terms of their revenues. So in terms of today's topic of getting small businesses ready for finance, as I said, we come at this from somewhat of an outsider's perspective because we don't lend to small businesses ourselves. And clearly it's been mentioned a lot already. One of the big focuses in this debate is the supply of bank lending to SMEs. There's been less attention on the demand side of things. So when it comes to external finance, how do you get small businesses ready to take on that external finance? How do you encourage them to have the desire to take on the finance? And also, are they equipped with the right knowledge to be able to know what's out there and how do they go about accessing that finance? And we've actually found through the programme that many of our successful entrepreneurs we work with often have a limited understanding of what the finance options are available to them. So we're really trying to equip them with the skills and the knowledge to ensure that they're maximising their chance of success if they do decide to go down that route of accessing external finance. As has been said already, businesses clearly need to be on a sound footing in every aspect of their business, particularly if they're aiming to grow fast in order to access finance. Our programme is holistic in terms of the components it covers and the issues it covers to make sure that people are on a very sound footing by the end of it. As I said, they learn with other entrepreneurs and encouraged to, importantly, share both their successes and their failures. The importance of timely and good quality financial information on their businesses is clearly critical, and having good strategic financial advice as they go through. Having a strong business plan is something, when we were doing the research on how to set up the programme, we talked to lending banks, they made it clear to us that that was absolutely critical. I think it was said by Steve at the end that you can't lend to a business if you don't know what their growth plan and their business plan is. So every participant leads with what we call a business growth plan, which helps them to pitch for finance if that's the route they choose to go down. Many small businesses do have a natural caution about taking on loans or selling equity in their business. So we try to expose our business leaders to the full range of options that are out there. So we bring along external providers of finance for them to meet and talk to. Also alumni who've finished the programme, who've taken on finance, come back and talk about their personal experiences. And we think it's having a positive impact. About 90% of our alumni say they have a good understanding of the external finance options available to them. That's compared to about 60% when they start the programme. And about 80% say that they have a good understanding of how to win finance, and that's against about 50% when they start. So you can see it is having an impact. And our participants are seeking finance, and in particular equity finance, more than the overall small business landscape in this country. About 20% have applied for bank loans and about 10% have received equity from angel or VC investors, and that compares to about 12% and 1% of the overall small business landscape. Many are also enthusiastic users of innovative finance. It's been mentioned that is a small part of the overall solution, but Adam can talk about his experiences in that space. And their experiences when it comes to innovative finance tend to be overwhelmingly positive. They particularly talk about the convenience and the speed of accessing that kind of funding compared to more traditional routes. But we do think more can be done on signposting the finance options available to small business. It's been mentioned already. It's fine having lots of availability of finance, but if people don't know that it's there and how to access it, it's not really solving the problem. And busy entrepreneurs often don't have the time or the resources to be able to go off and do that research on their own. So we think signposting is a critical issue. So briefly to summarise, the debate has focused on bank lending more than readiness to take on finance, which we think is very important. Our programme helps entrepreneurs to get the building blocks in place to be able to enable them to pitch for finance if that's appropriate for them. It's clearly having an impact on their readiness to take on external finance, but changing attitudes and increasing willingness to do so is a bigger challenge. And innovative finance, whilst it's still small, is changing the landscape. It's providing new options free of some of the traditional constraints of traditional finance. And a key area for future consideration is better signposting of the finance opportunities that are available.
Thanks, Fiona. Adam.
Hi there. I agree an awful lot with everything that's been said so far. I've had quite a few experiences in the past 6 or 7 years as my business has grown from almost a one-man band to the size we are now, with lots of different forms of finance. And like Steve said, it's not about one form of finance that's going to fit all businesses. Now, I'll give you a little bit of a background into my business then. I started the business in 2006. That's the business I have today, called TMT Technology Group. Before that, I had about 5 mobile phone shops, and we specialised in taking back, buy-back mobile phones. An opportunity came along purely by chance. Someone came into the store and needed some mobile devices reconfiguring. That means changing the software inside them. And that opportunity kind of led to where I am today. So it was actually for 50,000 devices. So I'd gone from a man with a small shop to configuring 50,000 devices within a week or so, and trying to figure out what staff I needed to do that, who was going to help me do that, what technology we needed to do that. And the technology we had day one wasn't the technology we ended up using. We had to innovate. So that was a great opportunity. But from that opportunity came the vision to look for other ways of doing this for other people. So instead of just working with that one organisation, we looked at the market around us, myself and a few people working for me, and we saw that if we approached the manufacturers, the distributors, the networks, they all had issues around moving stock around the world and reconfiguring devices to work in different parts of the world or on different networks. So that's kind of reconfiguration. It took a few years for the business to get off the ground. I started the business on a credit card. I didn't go to a bank. Winning that large business straight away gave me an opportunity to put some cash in the bank and work on that. But by about 2011, we were realising that we couldn't continue to grow the business the way we were. So I brought together some external people, some people who had been recommended to me that understood how to help put strategies together in business, and I brought together about 5. There was 5 of us in the management team at the time, and we talked about what we need to do, how we need to finance the business moving forward, if we need to finance the business going forward, and what our growth plans might be. From that came the opportunity to find out a little bit more about the Goldman Sachs course. So the person that came along that worked with us saw the potential in the business. He'd heard about the Goldman Sachs course that was going on. We're based up in Stoke-on-Trent, so it's a short distance, half an hour on the train for me to come down to Birmingham. I applied and was very fortunate, I believe, to get onto the second cohort of this business growth program. Now, like I say, it was only the second course. These courses are run by the university in conjunction with Goldman Sachs, and they constantly, at the start, were looking at how they might change and adapt these courses so that they're always better for the next cohort of people that come along. And I now know that over 800 people have done these courses. The real great thing about that for me wasn't just opening my eyes to what other people in similar businesses or in a similar situation to me were going through, but understanding that we were actually all going through the same challenges, and understanding finance was one of those big challenges. Many of us at the time, and I was definitely one of them, believed that organic growth in my business was the only way to grow, that I'd got this far and grown to a couple of million turnover at the time, and that was what was going to happen next. But really speaking to people on the course, taking the course, and the people that were invited to the course to speak to us, showed me that really that wasn't the way I was going to grow my business as fast as I wanted to. So I had to start thinking about finance and what forms of finances I needed to go and understand. The other great thing that happened was I started to make some great friends in business. So you've probably heard it before, but when you're at the top of business, when you're running a business, it's sometimes a lonely place. And if there's a group of other people, and there was about 25 of us on the cohort, that we can all ring up, meet on a regular basis, we still meet now, every couple of months we get together to talk about our challenges, then they've often been through things that you're about to go through or are struggling with, and vice versa. I can use my experience to help them through their challenges. So we all felt stronger because of it. Following on the 2012 course that I did, I was really fortunate to be picked to go on to a further course with Goldman Sachs, which was at Oxford University. So that was taking another group of people from different parts of the Goldman Sachs courses, so not just the ones from Aston, but from other parts of the country. And we were recognised as having businesses that were really rapidly growing, and we were introduced to people that could help us get through the challenges we were having at that time. And there's always challenges we're going to go through, whether you're day one starting a business and worrying about who you're going to recruit, to today we're worrying about how we're going to move, or we're not worrying so much, we have plans for how we're going to move from a 20,000 square foot building to a 40,000 square foot building in the next 6 months, how we're going to put new enterprise ERP systems, enterprise resource planning systems in the business that will allow us to manage the accounts of the business and manage the stock moving through the business. We're investing in that. We're talking about acquisitions. So I never would have dreamt a few years ago that I'd be looking to acquire another small business to bring in some technologies that would perhaps take us years to develop ourselves, but we're doing that now. So you can imagine all of those things aren't going to happen through organic growth, or they're not going to happen very quickly through organic growth. So we needed to look at how we're going to fund that. So talking about the growth, in 2012 when I first started on the Goldman Sachs cohort, there was 27 members of staff in the business. Whilst I was going through that cohort, it happens over a period of a few months, an opportunity came along which was one I probably wouldn't normally have taken up. It was an opportunity to do something very different than we do today. So we did back then. We were all about configuration, and the opportunity came along to work with a big insurance company to look after their stock, to be a quality control department for their devices. So being confident and having people around me that were going to help me, I went for that opportunity, and within 3 months we've got another 25 people working for us. We were now a logistics company. We today ship between 1,500 and 2,000 devices direct to consumers. We handle all the returns for this specific insurance company, and we quality and grade this stock. So a new string to the bow was kind of added there. And the plan now is to continue to grow, and our numbers have gone from, like I said, 27 then, up to about 81 staff today, or exactly 81 staff today. And within the next 6 months, with the acquisition that's going to happen, we'll be easily reaching up or going past that 100 number. So 100 staff, which is a massive difference from just 2 years ago. We want to continue to grow. And as much as I'm grateful for what Goldman Sachs has offered, then the next stage of growth isn't something that they're going to help and support me with. Yes, they're there on the phone if I've got specific challenges, but there's no course to go on to understand what I need to know next. So I came across the government's Growth Accelerator programme. That was, well, some people that I'd met on the Goldman Sachs course in the group had already joined it. They said, why not give it a go? And I'm working with, well, I'm starting to work with some people here who are going to give me some very one-to-one help and advice on how I need to change and grow the business, but will also come in and help start working with my management team. So bringing it back to finance, cash flow has always been an issue in the business. We've grown as a group from 2 years ago, 7 million turnover, the following year 11 million turnover, this year just completed 17 million turnover. We're going to hit 24 million turnover in this financial year. I'm targeting more than that. So we need money to do that. So I went to the bank that I was with at the time. I finished the Goldman Sachs course. I went to the bank. I needed some money. We kind of figured invoice discounting was the way forward because we trade a lot of stock as well, and they gave us a £500,000 facility. At the time we thought that was absolutely amazing, £500,000. Within 3 months it wasn't enough. We went back to the bank. We were growing almost too quickly for them. They said, no, we can't help anymore. Then another fortuitous thing happened. As part of the alumni, we kind of meet up on events, and one of the events we met up on was here in Birmingham, and I met a guy called Anil Stocker who was setting up a business called Market Invoice. Well, we'd set it up already. It was growing. We spent some time understanding each other's businesses. We could see that there was a fit. He understood my business very quickly. He invited another one of his partners up very quickly as well, and literally within a few days we had a £1 million facility. That allowed us to start trading, and you can see where the growth can come from when that volume of funds comes your way. The good news about that is it soon went from £1 million to £2 million, and now we have a £3 million facility with them. There wasn't really, going through that period of growth, any bank that we'd comfortably been able to sit down with that was going to be able to fund that. Now that doesn't mean that things haven't changed, they have. So as much as Market Invoice was great for us for the last year or so, what we're realising now is we need some other funding. Market Invoice can't help me fund a move to a new building. They can't help me fund the installation of our new computer systems at work. They can't help me acquire a company that's going to bring some extra skills. So we've gone back to the banks. Unfortunately, this time, a number of them have basically come to us and said, yes, we can see what you've achieved. We can see you've got a solid growth plan that's documented. We can see you've got your cash flows and your fund flows and your balance sheets and your P&Ls. All the things that we didn't have a few years ago, we have them. We've got our 13-week rolling cash flows. We've got everything that a bank needs to be able to make a decision on whether we're a good investment to make. And I do worry, thinking about what I was like before I'd been through these courses, I do worry that some people think they can just knock on the door of a bank and go and see the bank manager, say give me some money and just be given it. You've got to have some robust plans in place. You've got to develop your business to the point that they can be confident that they can lend on your business. So the number that we're talking about today is a £5.7 million facility. A year ago, £500,000, today 5.7 million. And yes, we can see how that's going to help us for the next probably year or so, but we've also got to start thinking about what happens beyond that, and building relationships with banks to be able to get them to see that we've had a great run, and we aren't going to stop. We're going to continue, and we'll need some more funding.
Okay, Adam, thanks. We'll throw it open to you shortly, but a couple of points to take up with the panel first of all. And Matt, since Ed was so beastly about about government policy and Project Merlin and
Fancy
so
a
forth.
journalist being beastly.
Well, I mean, with the benefit of I mean, it's interesting. You talked about the culture, how you've changed the culture within the department.
Yeah.
Do you think Britain's banks have sufficiently changed culture since the crisis? And secondly, what about some of the points that Ed was making there?
Yeah, I noted down some of the points that Ed was making. It's funny, isn't it, when you use a phone, there's still a cultural thing. When you use a phone to make notes, you look as if you're on Twitter, but actually, I was noting down some of the things that you said. But actually, the best response to some of Adam was from you, because I think there's a big change going on, and the change has some big drags and negatives and some big positives. And it's more positive in the medium to long term, and more, but we've got to get through the short term before we can get there, obviously. You quoted the figures, and there was you had a hilarious muddle between correlation and causality. I'll send you a brilliant Dilnut on this, where he says, I've just been on a course on the difference between correlation and causation, and he said, now I really understand it better. And he said, oh, okay, so you're going to be able to pick up people more when they make that error. And Dilnut at the end says, well, maybe, but we won't know. And you said that we've thrown a load of access to finance, but never has so much been thrown at a policy area to so little avail. And I'd just say that the counterfactual of what would have happened if we hadn't done what we did to support finance would have been even more contraction, and that's the point. So we've got this massive headwind of government-owned banks, and in particular RBS, which was more than half of the small business market and is still contracting its balance sheet. And that is what are we, 6 years on from the financial crash? In fact, we're 6 years on almost to the day to the collapse of Lehman's, as we were here in Birmingham. I remember it well. And yet that shadow still hangs over this area. Thankfully, the other banks are starting to pick up pace. Santander, in particular, is both a challenger but also quite big, relatively big in this space. So that's the short term, is the drag. And I would argue that the funding for lending in the business bank, in particular, but also other measures, have helped to offset some of that. But I think there's a much more exciting future, and you touched on it with the invoice financing that you were talking about, which is that finance is democratizing and is coming out of the big institutions. Now, our big banks are still enormous and still will play a vital role for many years to come. But the growth of crowdsourced finance is now rapid and starting to become, at over $1 billion, it's starting to become at least a credible player in the market. The amounts of different types of finance are coming back. The business bank is the government's contribution to this space, if you like, and in fact it's a wholesale bank, and so most of its action then goes into supporting alternative lenders. Before 2010, when Metro Bank got its license, there hadn't been a new banking license in the UK for over 100 years. Can you imagine any other industry where there hadn't been a new entrant for 100 years? Imagine retail. If we'd never had, if we were still shopping at C&A, and we never had Primark, I mean, what would I be wearing? There's no other industry where you haven't had many new entrants in 100 years, and now there have been 20 new banking licenses since 2010, and the new banks, the challenger banks, are starting to become significant players. And then on the British Business Bank, just to pick up on the point of Steve's, I totally agree that it needs to be a long-term proposition. We are, touch wood, we're late in the process of getting EU state aid clearance. If and when that happens, the business bank will then be able to be launched as an independent entity, and therefore has the potential to raise finance should that be a decision that's taken, and therefore be able to leverage its capital rather than simply use its capital direct. And the business bank has been a coalition project, but there is absolutely no doubt that it is strongly supported and backed by the Conservative Party, Conservative side of that coalition, and in a Conservative majority government, the Business Bank will be a big part of the future policy of the business department. So that's my. I also, like you, I picked up on that Ed wasn't being quite fair. And I just say one final thing, which is that I think this culture is changing, and Goldman's decision, for instance, to get into the smaller business space, partly, I don't think it's totally unself-interested. It wouldn't be very on-brand if it was.
So we're a large employer, we care about economic growth, and we think this is one way that we can help in this area.
And if a small proportion of those 10,000 turn into big future potential customers, then you've done your job, haven't you? Funnily, you're expected to make some money out of it.
Do either of you want to come back on what Matt said there? I mean,
so much. I don't want to get intruded on questions. But my point is just broadly, though, is just about, I'm curious about how comfortable you are about the level of intervention. How much of this is emergency, how much is permanent? And
I see.
You know what I mean? Because I think that's an important question, because this is about our relationship with capitalism.
I think that I am massively comfortable with intervention in access to finance, because this is anyway, finance is a heavily regulated industry. The state has a role, whether it likes it or not, as we discovered in 2008, it has a much bigger role than it had previously tried to think. In the 90s, in the 80s and 90s, there was an attempt made to essentially privatise liquidity and get the state out of liquidity provision, and there was a consequence of that, and that was in 2007 when liquidity provision dried up. The state wasn't there, and had to reinvent a load of systems for provision of liquidity that had been last used over a decade before, other than in emergencies like after 9/11. And the state is always going to be in the market for provision of backstop liquidity, no matter what requirements and protections are put in place, and we should just be realistic about that. And so this is clearly an area where the government has a big role.
That's a good point. I mean, it's worth noting, by the way, that funding for lending, Mario Draghi has taken a leaf out of that particular book for his latest emergency measures to support lending in the Eurozone.
With moderate success.
But the funding for lending itself is a modern version of the discounting of bills that was the way that liquidity was provided for about 150 years up to the mid-1990s. So it's not a new invention. It's about ultimate backstop of liquidity from the government.
Steve, you touched on alternative finance earlier. Are you as convinced as Matt is that it's a serious contender in the market at the moment?
I am convinced that it could be, but it's not necessarily yet. It's going to be part of the future, isn't it? This is it. You're going to have a traditional bank finance, you're going to have alternative funders, you're going to have plethora of different funders all at the same time, and that's essentially what we need. Is we need a diverse marketplace for businesses to go to. The problem is that there's always been this argument that businesses have relied too heavily on bank finance, and RBS was mentioned because it had such a big stake in small business lending. But one of the problems with RBS, certainly from my experience of it, was when businesses were saying, actually after the crisis, was that in certain areas of the country they were saying, look, RBS are really helping you out. They're really knowledgeable, they know what's going on, but the difference between, say, somewhere in like Yorkshire and the southwest was huge. The institution just got too big, and they couldn't have a consistent level of service across the entire country, and that's a real problem. And with this kind of move, technology is great, it helps us all, it improves living standards, etc., but it's also moved to a situation whereby banks are retrenching from the branch model, and is there the same level of interaction between lender and lendee that existed like 20, 30 years ago? If you speak to the old guard of the business representative lobby, they talk about the days when you knew the bank manager knew every business in the local area. That clearly isn't going back to that model, but are we going too far the other way is the question.
Adam, you touched on some of your experiences. Have you actually had to change banks at all along the way here? Have you tried to?
Absolutely. So yes, 10 years ago we did have that type of relationship, but as a small business, I think the bank manager is going to know more about business than you do. If you're starting out fresh, you perhaps would go to your bank manager and ask for some help and guidance. Now that's not the case. We know what we need in business better than the local branch manager is going to know. And we work with different people at different parts of the bank, if you like. The experience we've had recently, I suppose it helps if you've got a successful business, though, is good news from the banks. The bank we're with now isn't the bank we started with, but we have been with them for some time, and they are, or have been, coming to me and saying, is there anything we can do to help? It's just the rate of growth that we've got kind of puts us out of the category of what they can help us with. Yes, they'll give us a small overdraft. Yes, they'll give us £500,000 worth of funding, but we needed something bigger and better. And it was Santander that have come to the rescue. And I have another backup bank as well if negotiations we have with Santander don't go the way we want, but we're pretty much there. I'm ready to sign on the dotted line.
Right. Now we'll throw it open to you in just a moment. I've got one more for Matt, which is I put the same question to your Labour shadow in Manchester last week.
Yeah.
So, I mean, you touched on the British Business Bank, but assuming we get a coalition government, a Conservative government next time round, freed from the shackles of coalition, what are the kind of things that you want to be doing in this area?
Oh, God, well, we really want to drive this ahead. I mean, one of the business bank I think is a big and very positive national institution, the crucial thing that it does, and that I think it could do more of, is that it supports the capital of alternative providers. So it supports competition in the market. It isn't a retail bank, it isn't a direct competitor to the high street banks. It fills a different niche, but it allows others to provide that competition, whether it's by reducing their capital requirements by giving them guarantees for a fee, or whether it's by direct provision, potentially equity into a lending provider. We want to put rocket boosters under it.
Okay. Gentleman there.
Thanks. Tom Fox from Unlimited. We support social entrepreneurs. And thanks, Matt, for your leadership and championing of social enterprise. We run 2 accelerator programs for high growth potential social entrepreneurs, one of which is with Telefonica Wire. Our experience from that is that it is possible to get those ventures investment ready. And the interesting thing is that around 80% of the finance that they're getting hold of is equity investment, and it's not what you might think of as social investment, it's commercially driven investment. But there's still a long way to go there. When the commercial investors make that investment through their relationship, they say that they're more likely to invest in social purpose businesses in the future, which is very interesting. But clearly we need to bring more people, get more investors realising that there are opportunities here. So I have 2 thoughts on that. One, I think you're already doing with your department in terms of profiling social purpose businesses as part of the real business community, and I think we need more of that. But secondly, to think specifically to help to normalise some of the kind of the instruments that those businesses can use to protect their social mission while still being commercially viable and commercially to be able to give return to investors. Yeah. So golden shares and other mechanisms, and there's a notion of profit with purpose business which is emerging now, which is slightly separate from social enterprise, fully profit distributed but still mission locked, as it were, which it would be very useful if the department could do more to popularise and normalise.
Excellent. Well, Simon Devonshire, of course, has just become, who works with you, I presume, has just become the entrepreneur in residence for a year in Biz. So you've got your direct line into the department. I am a champion of social enterprise. I also happen to believe that almost all businesses are social enterprises. After all, what is a successful business other than a way of solving somebody else's problem in a reciprocal arrangement? And that is what society is built on. So, you know, whether it's you're solving the problem for the guy who walks in with 50,000 handsets. Did he actually walk in with?
No, we went to his place.
Right. But ensuring that structures other than plain vanilla Companies Act governance arrangements are not only available but tested and rigorous and well used and supported and have the required legal clarity over the purposes is vitally important. But there are all sorts of, as you, I think you described quite eloquently, there are all sorts of gradations from a charity, not for profit, all the way through to a social enterprise that works on a commercial basis, where profit is a second order compared to the social purpose, all the way through to profit with a purpose. But profit with a purpose, I think most companies would say that they have profit with a purpose, and they write down their goals and their key objectives. So there's a whole spectrum here, and we've got to make sure that the whole spectrum has mechanisms in order to support people in the goals that they want to achieve.
Fiona, what you wanted to comment?
I just wanted to add, actually I didn't mention it in my comments, but when we designed the programme, we specifically designed it to incorporate social businesses as well. And because by talking to people, we realised that actually small businesses and social enterprises share many of the same issues and challenges. And so Adam, when he was in his class, I don't know exactly how many social enterprises there were, so 3 out of the 25. So, and when they break up into groups, talking about issues, they'll be in that mix, and they're not kind of set aside in a separate group. They're just all because they have very similar issues to them.
Another question, please. The gentleman there is
Thank you. Matt Hartley from the Money Advice Trust. We're a national money advice charity. Right at the beginning, Ed mentioned the very high proportion of small businesses that fail. And one of the reasons for that is simple problems with managing debt problems. We run Business Debtline, the UK's only dedicated free debt advice service for small businesses. We helped 39,000 people last year, 54% of whom were able to resolve their problems and continue to trade. And my question to the panel, and particularly perhaps the Minister, is what more do you think can be done to raise awareness of sources of advice for small businesses as they set out on their journey?
Well, you can keep coming and making comments like that at the party conference. It's a good start. There's a whole... we try to reform the way that government advice is provided for small businesses. In doing so, especially coming from a small business background myself, I am acutely aware that government advice, like the Growth Accelerator Programme, is only one part of the answer. And it isn't, we've got to be focused on the customer rather than thinking that the things that we provide, Growth Accelerator being one, or Manufacturing Advisory Service, for instance, are the answer, are the pitch. There is a much broader range. But we're trying to make the offer that the government has simpler. There are a whole plethora of different schemes. We're trying to bring them all together under one brand, under one umbrella organisation to make sure that they can fit the needs of the customer. And of course that has to include debt. But we're only part of the answer here.
Anyone else want to respond? Yes, Steve.
Yeah, sure. So what Matt says is right, is you need some kind of central point of branding that businesses can recognise that they go to this point and then kind of find out what schemes are available to them. What I never thought was quite cracked during the financial crisis was how we communicate schemes to businesses once they're there. And I don't think we did it necessarily well on behalf of the government. We didn't use necessarily the avenues that they did have, such as HMRC, which touches every business within the UK and can get information to them. I don't think the lobby organisations, the accountancy bodies, the business bodies necessarily played their part as well as they necessarily should over time as well, in trying to get the message to their members of various schemes as well. And it's only when we kind of crack that communication aspect of things that it's actually going to improve the situation for businesses as well.
I'll agree with Steve definitely on that. If I hadn't got this group of people around me saying, we've tried this, why don't you give it a go, or do you know about this, then we wouldn't have got 2 Technology Strategy Board grants, and we wouldn't have got the regional growth funding, which was £200,000 contribution.
Well, you've used all the schemes.
Absolutely, but I didn't know about any of these schemes until a year ago, and it was only meeting up with other businesses. So there's absolutely got to be a better mechanism for delivering.
I'll tell you a story about that. When we came to office, HMRC, I pushed for this to happen, for communication to small, especially smaller end businesses, through HMRC. And HMRC said, no, if we don't only communicate about tax, then we won't get our tax paid. And getting the tax paid is our job. So thanks very much. No, we won't put your leaflets in our envelope. No, we won't put your links on our emails. And that was HMRC's attitude. So we got the Behavioural Insights Unit, this brilliant unit run by David Halpin, to do a little test of if you write a nice letter to somebody from HMRC about all of the things that are on offer, like TSB or apprenticeships, which was my job at the time when I was pushing this, or other advisory services, or put in the links to the email, do you know what? People pay their tax faster. Like, write nice letters and people get back to you quicker. It's an amazing insight from the Behavioural Insight Unit, and it is now being rolled out through HMRC, but there's a culture change there. And we've got, David Gorka is the best person to talk to you about this, and he waxes lyrical about it. We've got an increasingly sophisticated segmentation system in the emails that go out from HMRC to target the different schemes, so to decide automatically which different links to put on the email. So this is, I completely accept the criticism, but I would say that we're motoring.
Very good. I think the gentleman here.
Yes, so Gavin Palmer, I live in various places. We have a family of small businesses. I've had all my life and things. There are a couple of tips which were quite good. I've just recently been to California and one of the things that was very fascinating was what's called the Maker Fair, where kids were making things. But hidden in a little secret corner was the Berkeley University, where they did a building competition with local schools about 30 minutes away from Berkeley University. And they would make up a group of students who, what I realized, actually got trained in running a small business and technology at university during their studies, and became an ideal recruitment ground for a brilliant entrepreneur in California. And I correlated it with the fact that California does very well in the technology. So that's something which, I got some pictures of the posters and they supported the business, it worked out very well. That's a little bit. Also, please have a second British Business Bank, because it always works well with 2. That's the history of 3i. We're just recreating what 3i was until it became too big, and then it became a PLC, and then it cut down its extra work. The main bit I see, and I have a lot of experience in it, having been a NatWest customer all my life, and having been involved in addressing and uncovering what's been happening in NatWest GRG. And the problem it seemed to carry on for so long was because every business customer with NatWest only heard a complaint about RBS as the one that did them over. And there was a big disconnect. And I'm sorry to say that for the politicians, you have been lied and duped by RBS to further their own selfish interest, particularly in that section. I have personal experience of the different bits.
You better explain to people GRG,
Oh,
that's the Global Restructuring Group.
Yeah, the Global Restructuring Group, or the Grim Reaper Group as it was nicknamed, where they saw that there was much more potential in manipulating and conspiring with various acolytes. Actually, the first example was probably Railtrack, allowed by Labour, so that they could take an extra bonus from their fees and recycle it, and also take some secret warrants in the new entity as well, which they don't tell about. It has damaged many thousands of people, but the main thing is it's thousands of entrepreneurial families that would have their sons, daughters, children going to the businesses, and also the other businessmen that saw them being ripped apart, shredded, and one of the intentions of the group was to make them financially very poor so they couldn't sue them and go through the courts. Now, we do have an opportunity, because of the disaster of RBS, in that we can compensate those people have lost the profits, etc., with shares in the bank. And it would make a very neat solution, because they're the ones that have suffered, and they'll have the greatest interest in making sure the bank returns to what it should be doing. And as someone has said, it has an enormous percentage of small businesses, and that would clear away the Chinese water torture of the fear of NatWest and the banking and what has happened in the past. And they have shut down GRG this summer.
Okay, thanks. Anyone want to come back on that? Steve? It's quite an interesting idea.
What was the question?
If you changed, so if you say these businesses, about 800 that are getting up into a business action group to get compensation back from RBS.
Okay.
If you said, instead of giving cash which the bank doesn't have, you have shares in RBS, actually the equity shares, it doesn't actually cost anything to the government because it's an equity transaction, and you also change the culture in the bank because they've got their customers with a large chunk of it.
Yeah, okay. I don't know anything about the global restructuring group or anything associated.
You haven't been reading your business pages, Steve.
I don't vaguely. But look, I mean, in terms of re-engaging with businesses, in terms of RBS and everything associated with it, I think the relationships have been broken, and however it rebuilds those relationships, I don't know, you need to make sure that they are actually working for the business as well as the bank, and making sure the bank can get back to the private sector. I don't really know how to do that. Your idea is one potential way of thinking, I guess, but I couldn't comment on it.
Okay, any more questions?
It's just re-energise all that whole network. I mean, it's every single constituency.
Yeah.
Look,
Dealing with GRG and the different scandals is a really important part of that process of normalising the banking system. I just caught, and it's interesting. It's an interesting thought which nobody had approached me with before, that you could do this through the sale of shares. I would just caution against the idea that there's a free lunch, because of course the shares aren't valueless. So whether you compensate somebody through cash or through equity, it's still a compensation, and so it starts to come from somewhere. And so there's a separate question of where compensation is appropriate and what is the correct financial vehicle for that compensation, if that isn't too sort of technical. But nonetheless, it is an interesting idea about the overlap between the two.
Hannah, there's a lady here.
Thank you. My name is Sonia. I'm from the Solar Trade Association. I just wanted to, as a question for Matt, to bring together the two parts of your job title almost. Obviously, in the energy market, we have the big six, probably the very opposite of small businesses. But in the solar industry, in the solar sector, the solar is very much made up of small and medium-sized businesses. And so you said that your civil servants are often very good at picking out where regulations are actually stopping small businesses from growing. Are you going to make sure that your Department of Energy and Climate Change civil servants make sure that contracts for difference in the new electricity market reform work for the small businesses in solar and elsewhere in the renewable energy industry?
Yeah. Yeah, that's really important. Of course, I'm a minister in two departments, and I'm a big supporter of the rollout of solar. I'm really excited about the fact that solar is approaching grid cost competitiveness. That is going to be a big moment for this country. And there are already 1 million people living in homes that have solar on their roofs. And I think you can see, even in cloudy old Britain, a view not too far away when solar is worth having on its own merits. Of course, making sure that can be financed is important, but most of this rollout so far has been privately financed, so it's exciting, and we've got to make sure that the systems in place for the CFD, which is the mechanism through which it is paid to be connected to the grid, we've got to make sure that that works for everybody.
Probably got time just for one more. If anyone, gentleman there.
Yeah, Stephen Carpenter from the John Lewis Partnership. I just wanted to touch on the issue of succession planning for small and medium-sized businesses. In our experience with employees having a real share in the company, it can lead to benefits, companies being more productive, more profitable in the long term, more resilient in recessions. But we've come across lots of research which shows that businesses aren't aware of employee ownership as an option to pass on their small and medium-sized family business to their employees, and they're not aware about how to access finance to do so. The government have introduced tax incentives to encourage employee ownership, which we're very grateful for, but I guess I just wanted to ask the panel really what else can be done to raise awareness with financial providers about employee ownership as a viable business option, and also with small businesses when they're thinking of their succession plans.
Anyone want to take that one? Adam, have you got any succession plans?
Yes, I do own all the shares in our business, but that probably won't be for much longer. So there are 5 key members of my staff that are going to be given shares or share options in the business. I was fortunate enough on my second Goldman Sachs course to work with a gentleman called John Hoffmeyer, who specialises in businesses that are owned by employees. So we had many conversations about whether that just kind of might fit the business that I have, and we came to the conclusion that no, that wouldn't work. We see it works for the John Lewis Partnership, but in the organisation I have, then we perhaps have more, how do I put it? We've got lots of doers in our business that are just interested in plugging phones into computers and coming in at 9 in the morning and going home at 5:30, and that's absolutely fine. And then as we move up the management level, then we've got people in there that are more interested in taking ownership in the business and can see the rewards of their efforts coming in other ways other than just a salary. So I think it kind of depends on the business and the people that are in that business and what the appetite is from both sides.
Anyone else want to follow up on that?
Well, if you think succession planning is not good in small businesses, you should try government. We're not planning any succession planning at the moment, we're planning to win the election.
Very good. Well, we have overrun by 10 minutes, and if I did that on Sky News, I'd be shot. So only leaves me to thank all of you for coming, to Policy Exchange for hosting the event, and our friends at Goldman Sachs for sponsoring it. And if I could ask you to show your appreciation for our panel, that's Matt Hancock, Ed Conway, Steve Hughes, Adam Whitehouse, and Fiona Laffan. Thank you for coming.